welcome everybody to another lecture as part of the beginners course series. I know that the PowerPoint is titled patterns, but mainly we're going to be focusing on the trends section of this lecture, which I consider to be essentially the fundamentals of any pattern in the market, because without trends, there really is no such thing as a pattern, right? Because different trends are what come together to form specific patterns. So today I plan on talking about the significance of trends on multiple time frames. So we're going to talk about trends on the daily. We're going to go through examples and identify them. We're going to talk about the basics of trends, what they are, what they mean, how to identify them in general. And then again, we're going to go back and drill into some real examples. So we're going to look at some daily trends, some examples of trades that I've taken based on trends. Ways that I shift my sentiment based on trends, different ways to identify trends, whether it's a line or a moving average or just structure in the market in general. So a lot of things to dig into tonight. I think this is going to be kind of a surface level introduction on understanding just price action in general. So this is going to get us all moving. And let's see. So yeah, again, here's where we are at in the course series. Again, this is kind of the meat of the course series here. Previously, we talked about support and resistance, basics of options, that type of stuff. Now we're into the real, in-depth stuff here. So again, this is going to be part of the patterns lecture. We're not going to talk too much about patterns tonight, mainly just trends. And again, just to remind you all why we're all here and hopefully why we are all attending each and every one of these beginners lectures is you are looking to be a successful trader who can find the highest probability trades and act on those opportunities with confidence. And again, I'll continue to emphasize this. This is the absolute goal of this lecture series, is to allow you to develop as a trader on your own through the help of the content that we present in this class, to allow you to go to the charts on your own, begin practicing the concepts we foster here in these classes, report back to our staff team or other traders that are your friends or whoever it might be to continue to check your understanding, to continue to help you grow, and ultimately to find success in the market. Because I truly believe that with the knowledge that we help develop in this course series, it is definitely possible. I've seen it with my own eyes. Many different traders who have came out of this course series successful, and many experienced traders who come to this course series to continue to grow their knowledge. So it's always an honor to spend this time with you all every night or every week. And yeah, so let's just talk about a few more things before we get into it. So as always, guys, I probably sound like a broken record mentioning this same kind of stuff at the beginning of each and every lecture, but just bear with me. There's always some new people. So as always, guys, I've been in each and every one of your shoes, whether you know nothing, whether you know a little bit, or maybe a little bit more. So I know what it's like to be at each and every one of these knowledge levels, and I do my best to cater these courses that we do every week to individuals with different learning styles at different knowledge levels in the market, whatever it might be. So again, just want to put that out there. I haven't forgotten about you. I know what it's like. Trust me, I really do. And I'm going to do my best to cater to all those different learning styles and knowledge levels. I always do my best to start my lectures with more basic information, and I continue to build on that information as we progress throughout the lecture. That's meant to just warm me up to learning and also just kind of a logical progression of knowledge. We continue to get more advanced as we understand the basics, the fundamentals of a specific topic. Then we talk about more special cases, more different ways to look at things, right? So that's essentially the big goal here. And yeah, is there any questions before we get started? Any questions, or are we all ready to get into the content for tonight? I'm excited for this one. So I think trends is one of the more fundamental things to understand. I mean, I'll probably say that every lecture, but because these are all pretty fundamental. Okay, well, I'll take your silence as a no on the questions, and let's get started. So I'm going to skip that cheat sheet on patterns there, and we're just going to get right into trends. Before I get into my own content, I want to pose a question to everybody in the class tonight. When I talk about trends, does anybody have any guesses or ideas on what their definition of what a trend might be? And it doesn't need to be in the market in general, right? Just what does the word trend mean to you? When you hear the word trend, what do you think of? Do you think of some kind of movement? Do you think of, I don't know. So let's read some of the answers. YD says channel. Salem says specific pattern of movements in one direction, a pattern, a flow of something. White shoes. Lambos is so dumb. A direction the market is moving, repetition. Okay. Yeah, I think those are all pretty solid answers for sure. I think Lambos is kind of missing. Lambos is thinking of another direction of trend. He's thinking of his trendy outfits, which I'm sure he's got. All right, cool. I like those definitions that we put in the chat of the trends. So let's talk about how I define trends. So in the market, there's two different types of trends, really. There's an uptrend and a downtrend. And here I have a really nice, pretty much perfect uptrend. And my definition and the generally accepted definition of an uptrend in the market consists of higher highs and higher lows. And just for your own background, this is the daily time frame, meaning each one of these candles represents one day. So first, let's take a look at the higher highs in this chart, right? If you start your analysis from right here, right? Obviously this high to this high, there's a little bit of a lower high, but let's say we start our analysis right here, right? You'll notice that every single peak that the market sets is higher than the previous peak, right? Every single one, right? Every single high was above the previous high and low each and every time. So this represents an uptrend, right? The price is moving to the upside direction. And the opposite, or the other part of an uptrend, is higher lows, right? And here you can see how I marked out these higher lows. Notice how every time the price comes into a dip, that dip is a higher price. And just a reminder, the y-axis here on this chart is price. So just to kind of recap, an uptrend consists of higher highs and higher lows. Here you can see the higher highs depicted in the red circle, right? If we look and compare to the y-axis, each and every one of these red circles is higher than the previous, meaning that this is a very well-defined uptrend. Same thing with the lows, right? Each and every low is higher than the previous low, indicating also a well-defined uptrend. Does this make sense to everybody on a surface level? We understanding kind of the basics of what a trend is looking like. Very simply, right? And just think about, kind of squint when you're looking at this chart and think about the direction of this chart, right? It's moving to the upside direction and it's very consistent in that movement, right? There should be no debate on what direction the price of this specific stock is moving, right? It's very clearly to the upside. So there's a few ways to determine if something is in an uptrend, right? And Cade, that's a really, really good question. We're going to talk about that more later in the class. First, we're going to talk about just kind of the foundational examples of what an uptrend and a downtrend is, and then we're going to talk about it more in real time. So just for you guys' background, Cade is talking about how to understand what the trend is in real time. So I'll talk about that, I promise. So again, right, here's our basic uptrend. And there's a few ways to determine if a stock is in an uptrend or a downtrend, right? The first way is what we're looking at right now by drawing out or identifying these higher highs and higher lows, right? And you can highlight them on your chart when you're first learning to just kind of get that habit in place. You can see it in your head after a little bit of experience. The second way is drawing a line, right? And I made a really simple line, but remember our lectures on support and resistance, right? Support is where buyers typically step in. And the way I've drawn this uptrend line, you can see how buyers have very commonly stepped in. And obviously this is from, a year or two ago, but great example regardless, right? At this uptrend, we very frequently saw buying at or right above this uptrend, which is no coincidence, right? And when we look at charts from now, you'll see the exact same phenomenon repeated over and over and over again. Jabbar says, is the volume relative to the trend? Just like any support or resistance, it's always nice confirmation to see volume pick up when we're nearing the trend. So you probably can't see it very clearly, but just notice how on this dip here, volume is above average. This dip here, above average volume again. Same thing here, right? Above average volume on this dip. Here, above average volume. So what you're looking for at support and resistance is you're looking for above average volume when we come close to those levels. So that's not necessarily a property of trends, but support and resistance as a whole, right? So again, this is exactly what an uptrend could be defined as. It's just a simple line, right? So again, we talked about higher highs, higher lows, and a simple uptrend line. And I'll go through drawing these lines. Right now, I'm just trying to introduce these concepts, what these things look like. And Rev, I definitely do agree with you. Moving averages is absolutely another way to identify trend, and we'll talk about that a little bit later. So let's talk about the exact opposite, which is a downtrend, right? And this was when the COVID downtrend was first starting, obviously, or not COVID, the 2022 bear market downtrend was just starting. Obviously, this trend has developed significantly more, which we'll look at. But a downtrend is the exact opposite, right? Or if you remember, an uptrend was lower highs, or excuse me, higher highs and higher lows, whereas a downtrend consists of lower highs and lower lows. And let's take a look at these lower highs, right? Notice how this downtrend consists of lower highs, where the price is consistently decreasing over time, and also lower lows, right? Where the price is also consistently decreasing over time. Now, I want to take a quick step back before I go any further. Can anybody guess what these lower highs and lower lows might mean? What is the deeper level meaning, and why does identifying these levels matter? I have a few reasons in my head, but I want to see if you guys have any guesses. I'm not expecting you to know the answer to this. I just want to see what you guys think, right? Why do you guys think this matters? Cade says more sellers. That's along the lines of where I'm thinking, certainly. Yeah, that's definitely part of it. Anybody else have any ideas? Sellers stepping in? Yeah, I didn't expect multiple people to think about that, to be honest. I underestimated you guys. The buyers can't drive up price. Sellers are gradually stepping in. Breakouts, yeah, you can consider them breakouts to the downside, certainly. Market structure, yeah. Honestly, continuations of downtrend, yeah. Honestly, those are all better answers than I expected. So excuse me for doubting you guys. I didn't expect that. I'm very proud. So essentially, there's two places that my head goes to when I think of what a downtrend and what an uptrend means. And the first place my head goes to is always the analogy of the tug of war game, right? And obviously, in the tug of war, there's two sides fighting for control. And essentially, that is exactly what the market trend is telling you, is who is in control of a specific underlying equity at a specific time or over a specific time frame. So for example, when we're looking at a daily uptrend, that means bulls have been in control or are in control of the price movement of a specific equity over an extended amount of time, meaning that they're strong, they have continued strength, and for the most part, you shouldn't be betting against them in a significant manner. And we'll talk about when it makes sense to fight a trend and when it doesn't make sense to fight a trend. And number two, my head always goes to probability, right? Because that's where I always like to think is probability in terms of what's going to make me right on a trade, what's going to make me wrong. And automatically, when the trend is in the favor of your trade, you have a higher probability of being right, right? And obviously, that's a conditional statement. There's going to be times where you shouldn't be going long in an uptrend and times where you shouldn't be going short in a downtrend, right? And there's multiple things that make sense or pieces of analysis that you should be thinking about when determining when to enter and exit in an uptrend and a downtrend. And we'll discuss more specific trade ideas later. But those are the two places my head goes to is, again, who is in control of this specific stock? And number two, why does this matter, right? Which is the probability. So those are the two things that I'm always thinking of when identifying trend. And that's why it's so important to me to know what the trend of a specific stock is on multiple time frames. And it should be very evident why this matters more and more throughout this lecture. Kate says, are the buyers and sellers represented by the wicks? Yeah, so that's obviously part of it, right? I believe you're in the candlesticks lecture, Kate. If you remember, these candlesticks represent not just buyers and, well, they do represent buyers and sellers. What I meant to say is the wicks don't just represent buyers and sellers, but the whole candlestick represents the activity of buyers and sellers at specific levels during specific time periods. Does that kind of make sense? So it's not just the wicks that represent the buyers and sellers. It's every part of the candlestick, the body and the wick. Okay, cool. That's okay. No worries, no worries. Cool. So I really am happy with that answer. And again, right, just like an uptrend, there's also a way to draw a downtrend as a line, right? Again, this is a resistance trend. It's where sellers typically step in, right? So just to recap, we have uptrends and downtrends. Those are the two trends that exist in the market. There's also consolidation, which isn't really a trend. It's when the stock isn't really going anywhere. So uptrends and downtrends. I want to go to the charts now, and the rest of this lecture is going to be all focused on the charts. And we're going to look at specific examples from the past, from today's trading, intraday, and more as to why trends matter, how they've been significant in the past, and what to do in the future when we identify trends. So let's just take a look back on the weekly time frame, right? This is and I'll remove all my indicators so it's expressly clear what we're all referring to. So this was the trend that I had drawn. I think it was something like this, probably. That's what we had there. So here's one trend that we could have drawn, right? Important to note that the trend should act as support. And once it doesn't, that's when it's time to exercise caution, right? Because again, we're seeing a very clearly defined uptrend here on the weekly. Higher lows, higher highs, no matter how you look at it, right? And here we broke down from this trend right at this area. So obviously this wasn't the end all be all, right? And most people just ended up looking at a different trend line because obviously this bull market continued upwards. But this is the first time where this trend began to show weakness, right? So these are things that you're going to want to be paying attention to. As I've mentioned in previous lectures, I always start my analysis on the higher time frames, right? Because the longer time frames are the most important to talk about and understand who is truly in control of a specific stock on the higher time frames. Again, right, just for some more relevant information, right? Take a look at this downtrend from this current bear market, right? Notice how we created this trend with 2 points, right? It's important to note that every trend requires 2 points to actually exist, right? You can't just have one candle, draw a line and say, all right, there's my trend. No, that doesn't work, right? There's no logic behind this trend. You have to have 2 points for any line to have some kind of value, right? If you think about back to basic algebra, y equals mx plus b, you have to have a starting point and an end point for that line to make sense. You can't just draw a line somewhere and say, okay, this is my trend. So a trend always starts with 2 points. So it's safe to assume that once we have 2 points, we have some kind of trend established that we can look to in the future, right? And if you notice, we made this trend in these 2 specific peaks on the weekly chart. We revisited this trend a third time, and there was a significant selling event off of that trend line. And once again, the fourth time we visited this trend, another significant selling event, right? So this is just proving that trends are absolutely significant in the market, right? No matter how you look at them, whether you're drawing a line to look at the trends, whether you're referring to moving averages to look at trends, or whether you're looking at just simple price action, right? Lower highs and lower lows, or higher highs and higher lows. It's very, very important to keep the overall trend of any specific stock when you're trading in mind, right? So this is how I would have drawn, and actually still do have, my weekly trend drawn on SPY. This is an interesting question, Pratik. And Pratik says, does it vary in significance if some points of contacts are wicks while others are bodies? And that's kind of up to your own interpretation. Me personally, I typically look to the wicks for the strongest level of support and resistance, just because that's, to me, in my head, and I've found in my own back testing and trading, that this typically seems to be the most aggressive point or aggressive reactions. And as an options trader, I'm looking for the volatility. I'm looking for aggressive reactions. And all these wicks represent where we have seen aggressive reactions, right? Because that's the long wick to the upside, indicating where we saw a significant change in trend or direction in this case, because in the weekly, the trend never changed. Lana says, question, do buyers and sellers weaken at trends or support or resistance? Inherently, no, right? We can't ever say that buyers are always going to weaken at a specific trend or support level. But when looking and analyzing specific trends and support and resistance levels, it's important not only to identify a specific level, but to identify what the price action is doing around that level. So for example, let's take a look at this daily chart, right? Notice how, at least on this most recent touch of this trend, the first time we came up to this trend, price stalled out right at it. The second time we came up on this trend, which was a gap up from, I believe, CPI, we made it pretty significantly above this trend here. And very quickly, we were brought right back under. So what this says to me is sellers are very strong in this area, right? And again, multiple ways to look at this, right? We're right at this trend line resistance. We're also at these equal highs, which should act as resistance as well. 410 level, which is a nice psychological resistance level. So multiple points of confluence there to support a short thesis. But essentially, at any support and resistance level or trend or whatever it might be, you want to not only be identifying that specific level, but you also want to be looking at the reaction to that level, right? And if we're analyzing the daily chart here, the reaction at this trend line is clearly not bullish, right? Clearly not bullish. And why do I say that? Well, we had a very bearish candlestick closing near its low, right? So that's not any bullish indication. The very next day, we retested that same trend and had a decently bearish candlestick. I wouldn't say this is very bearish, but we closed in a relatively indecisive manner. But at this point, when we close below this support level here, you can't be very bullish anymore, right? And obviously we saw a relatively decent downswing after this close, right? So I'm not necessarily expecting each and every one of you to top ticket and short it right here, right? That's not always probable. However, you need to be paying attention to the reaction off of your specific levels, right? Because you have to expect buyers and sellers to be fighting over control over these levels. So is that going to answer that question? Can I explain that gap there? This gap here, I believe, was due to the CPI data release. These gaps here, I think, were strictly technical based from my understanding following the CPI release. From the blue candle to the gray. Yeah, this one right here is, I believe, due to the, what was it? Probably November CPI data. All right. So again, right, just to kind of hammer down that point here, we have that resistance or support level that we drew earlier that should have been significant, right? Same thing with this level here. I believe 393.5 is the one that I gave in my watch list, right? So off of these two levels, this is the same concept as looking at this trend, right? And you can see how support and resistance levels provide similar reactions. Notice how we got a very bearish candlestick here, closing off of these significant previous support, but now resistance levels, right? So notice how in this area, these levels acted as support. And here, oops, I removed the wrong thing. Here, this level acted as resistance. And we got a nice bearish candlestick closing near its low, but we didn't get an increase in volume like I would have really wanted to see for a nice bearish continuation down. So tomorrow's going to be an important day. We have Jerome Powell speaking in the morning, but I don't want to get too far into tomorrow's analysis at this point. But does that answer all the questions for now? Matthew says, when we have a breakout, should we wait for at least 2 to 3 candles to confirm it's not deviation, or I'm assuming like a fake out? That's kind of up to your own strategy. Every time, I'll give kind of some insight into my line of thinking though. If I'm trading a breakout over a specific level, I always wait for the candle closes no matter what. So at least one candle has to close above that level for me to want to trade that breakout, right? So whatever time frame I'm trading it on, right? For example, on this daily trend, I'd really want to see a daily candle close above this level for me to have some form of confidence in a breakout, right? And in this case, that never came, right? And obviously, I could be cherry picking this and easily saying exactly what's correct, which in this case is true, right? I know exactly what happened. So it's easy for me to say, oh yeah, you should have waited for the daily candle to close, right? That's not impressive. Anybody can look back at the chart and say what happened. So don't mistake that for some kind of all-seeing eye. But it is important to note that studying the past and studying price action is so applicable to tomorrow's trend and tomorrow's price action, because price action patterns repeat themselves. Trends are present in every single stock in the market right now. You could go on any time frame, on any stock, and identify a trend that's significant. So we've talked about some longer time frame trends, and I want to give a little bit more examples of some shorter time frame trends and how I would use trends and how I do use trends during market hours. So typically when I'm trading during market hours, I'm looking at the 5-minute chart. And just to give you guys a little bit of insight into what my setup looks like, right now on this main screen, I'm looking at, and this is what I look at during the market, right? When the market's open, I look at SPY 5-minute, I look at some 2 other select stock 5 minutes. On my other screen, I have some hourly charts open and I have the VIX open, right? And on all these names, I'm looking at different trends, right? I'm understanding what the trend is. So I'm going to talk you through my thinking process when I was analyzing SPY today. And we're going to begin to layer some different levels of thinking that we've developed in the past. So first things first, and I can even give you kind of the proof of my line of thinking, just so everybody knows that I'm not blowing smoke, even though most people probably won't think that. Essentially, right at open, I noticed a few bullish indications, right? We had Apple opening above a key level identified in the watch list, ES opening above a key level identified in the watch list, and SPY opening above a key level identified in the watch list, which I said were all signs of bullishness, right? And you might be wondering, well, how did I come to that conclusion, right? Well, it's important to note that there was a key level in multiple stocks that I identified as being a key threshold to watch out for, right? So that's the first part of my thesis, is understanding where we are trading at relative to a key support and resistance level. And in this case, SPY was opening above this 390 level, which I determined to be key, right? If you take a look at the daily chart, look at this 390 area, right? Obviously being 390, it's a key psychological level. It's a nice round number. And that 390 area was also the previous low that we had seen right here, where we saw some significant buying, right? Off of this 390 level, we got a nice 5% rally, which is pretty significant for that small of a time frame, right? So that 390 level was significant to me. It would have served as a significant pivot to gauge my sentiment there. So we opened above that 390 level. Then I took a look at the hourly chart, right, which further confirmed that nice break above. Obviously, this hourly candle was looking different at the time. And then you need to take a look at the trend, right? So the hourly chart is usually where I look at the trend in pre-market, and I understand what direction we had been moving in. So Friday, it was very evident we had a really strong uptrend, right? And you have to remember that there's specific levels where you have to anticipate a reversal or be watching out for a reversal. And typically when I'm looking for a reversal, it's at a strong resistance level, which would have been 390. And you'll notice we got a decent reversal in the after hours off this 390 level on Friday. However, today, if you boil down to the 5-minute chart, notice how we didn't get any significant reversal in the pre-market session off of this 390 level. Small dips, which are to be expected, right? There's going to be some sellers parked at this key level because that's why it's a key level, right? We should see some selling at this level, but there was no significant downside movement. And if we take a look at ES 5-minute, which should provide a little bit of a cleaner price action for the pre-market data, here you can see a very clearly defined uptrend, right? And if we take a look, it's higher lows and higher highs, right? All throughout pre-market. Even once we get into the cash open, still another lower high. This is my first, sorry, I thought I heard somebody in my house. This is my first, that was weird. This is the first clue that I have going into the open, is I'm always looking for what the trend was in pre-market. If you're a day trader, there's no reason you should not be doing this. You have to understand what the stock has been doing before the market has opened and what it did the previous day, right? So that is all part of my thinking process. So again, 2 things that were working in the bull's favor. We were opening above a key pivot being 390, and we had a nice uptrend already intact in pre-market. So personally, for full transparency, I did not play a single trade on SPY all day. I didn't take a single trade on SPY all day. Just to make that clear, I did not trade any of this action. So don't act like I caught this trend. I didn't. And I was completely fine with that. And I'll talk to you about why I missed out on this trend, because I do have a reason, or an excuse if you want to call it that. So how I was looking to trade this is at open. What I was looking at is, first of all, we had this really large wicked candle with a long wick to the upside and a long wick to the downside. This essentially indicates to me that the market is indecisive, but it's looking to move somewhere, right? This is something that Al Brooks, who is a really famous day trader, incredible day trader with 40, 50 years of experience at this point, I'm sure, considers a stock being in breakout mode, right? And what that means is it's looking to either direction, the upside and the downside, in determining where price can continue, right? Because it's looking to trend. Why is it looking to trend on this specific day? Couldn't tell you, but it is, right? So that's the first thing that I identified is, okay, we see this candle with long wicks to the upside and downside. Price is definitely looking to trend in one direction or another. The next 5-minute candle of the day, we get a long wick to the downside, indicating the presence of buyers. Third 5-minute candle of the day, we get the highest close of the day, closing right at our pre-market highs. So still not an indication for me to go long. However, we're starting to see the strength in buyers. Finally, we get a close above the previous high of day where these wicks were parked, right? So notice we get a close above these wicks where we previously had not closed outside of this range, right? If we take a look and draw just a box around this wick, right? First 5-minute candle of the day, this is going to be our opening range. Notice how price hadn't closed outside of this box until this candle right here, right? So this to me is the market now resolving to the upside. It has broken to the upside out of this opening range, right? So now we have 3 things backing an upside thesis. Number 1, we broke above this 390 level. Number 2, price is in an uptrend, right? We already talked about how ES showed an uptrend, SPY showed an uptrend as well, right? So boom, there's 2 things talking to us and telling us a story that price is supporting a further uptrend. Number 3, price breaks above this range. And then number 4, it retests this range and finds a significant amount of buyers. Those are 4 amazing signals to be looking to go long. You might be wondering, well, Tosi, you just talked about some great reasons to go long. Well, why didn't you hit it? And I have a reason for that. I have a system and I have specific rules that I follow. And I don't trade the first 15 and sometimes the 30 minutes of the day on Monday. I just don't, right? There's usually the chance for significant reversals, not always going to be clean action. We have some events coming up later this week. So I really wanted to just sit back and watch the action for the first 15 to 30 minutes. And that's exactly what I did. And by the time we had consolidated in this area, it was about the time where I was ready to trade. And I still wasn't feeling very interested. I had felt that price maybe had gone a little far, a little quick. So I wasn't interested in taking the trade, right? Maybe I missed out on a nice 1 point move to the upside, and that's completely okay. We're not going to catch each and every trade, and I can't complain. And I was completely fine with missing out on this action and studying instead. So that's my reasoning why I didn't take this trade. However, now looking back on it, we're building the knowledge and looking at the examples to understand the trends. So when this pattern repeats itself, maybe I'll feel a little more comfortable to hit it with a small amount of size. Even though my system doesn't support that, maybe I'll grab one contract in the future just to try this setup out, right? Today I didn't, and I'm completely fine with that. And I'll continue to do that same behavior because that is what makes people successful in the market long-term, is following a set of rules, following a set of standards, and building off of that forever, right? And not breaking that standard. So obviously missed out, but nothing to complain about there. So, and Kate, I will talk about what I traded today, and I'll talk to you about why I did that as well. So again, right, hopefully now you're understanding a little bit on how trends can be such a significant part of a thesis, right? Again, for an uptrend, we're looking for lower highs and higher highs and lower lows, higher highs and higher lows. Can't talk. So again, we identified uptrend and pre-market. Just to hammer this example home, identified this uptrend and pre-market, identified price was above a key resistance level. Right here at this break above this previous high, this should indicate to you clear as day that price is continuing the uptrend. There's no doubt in any trader's mind that the uptrend is continuing here, right? We have another higher high set. We broke out of this opening range from the first 5-minute candle of the day. Oh, actually, I drew it wrong this time. We broke out of the opening range of the first 5-minute candle of the day. We retested it. There should be no doubt in anybody's mind that this is an uptrend, right? There's no doubt that this is an uptrend. So before I continue on, I know I probably just rocketed into that example without any warning, but it's one that I really wanted to speak about So does that make sense to everybody, or did I go too far too fast with the detail that I started providing? What do you guys think? Got a thumbs up from Matthew. Isn't those candles right at open super bullish? One big green encompassing two red with another big green. Are you referring to this right here? Yeah, I definitely agree with you. This is definitely bullish movement. However, I always wait. No matter what the first candle of the day looks like, especially on a Monday, I will say I have traded the open like once, and that was actually on Friday. Was my first time trading the open in all year, all 2023, and probably since November. So it takes a lot to get me to trade the open. But if I see something perfect, I will do that. And today, this wasn't a setup that I wanted to take at the open. And for better or for worse, obviously it would have paid. I can't complain, right? I have absolutely no complaints. Made my money in a different way today rather than following this trend. So it seems like we're good. Any specific video recommendations for Al Brooks? I have some links probably. I'll have to take a look. I haven't watched too many recently. I just watched a couple because he's really, really dry. It's pretty hard to look through him. But yeah, it's that's why I'd like to think it's better for me to put my own spin on his knowledge, apply it to my kind of think tank, if you want to call it that, and ideally present it in a little bit more of an exciting way for everybody. I'd like to think that I'm hopefully a little bit enthusiastic and exciting, but maybe not everybody shares that same sentiment. But okay, so that's my first example of using trends and how it matters intraday, right? Now I want to talk to you guys about a trade that I actually took based on trends. So this trade is KO. This is one that I have been watching for a while to go short on. And I've been watching this uptrend here on KO. And wow, this is really sloppily drawn right now. So I'm going to actually redraw this really quick. Let me fix this. So uptrend here on KO looks something like this, right? Notice it's actually not perfect right here. Maybe I should be drawing it like that, but I'm drawing it like this because I think this trend is relevant and it has proven to be relevant so far. So KO is a name that I've been watching for a short, right? Multiple reasons behind the thesis. I'm not going to go too far in detail to it because I don't think that's important. We're going to focus on trends today. But KO is a name I've been watching for a short. And there's a few key levels that I identified. I'm not going to go too far into why these levels are key. If you want to learn more about kind of how I identify key levels, that's all on support and resistance. Talked about that for like an hour. So again, right, built my thesis on KO. I found my key levels and I started by looking at the daily and weekly charts. If we take a look at the daily here, first thing I noticed over the past few days is I noticed a change in structure, right? First things first, we set a very slight lower high, right? This is what I'm looking for in a reversal, right? So again, you heard me mention earlier, there's a time and a place to begin looking for a reversal, right? If I was looking to short KO throughout this whole uptrend, which it's funny, Minion and I just talked about it. There was a time where I was looking to short KO during this uptrend. I didn't take it, but I was looking for it. It was actually no, it wasn't all the way up here. It was right here is where I was starting to look for a short on KO. It didn't take it, thankfully. Obviously, it didn't work at all. Not the best trade idea, but we didn't take it, so it's all good. Not always going to be perfect, but right. So first things first, I noticed a change in structure. Price is setting a lower high. What that means to me is buyers are becoming weaker. Always important to note, you got to have your finger on the pulse of the buyers and sellers on a specific equity in the market as a whole. In this name in specific, KO, there's a few reasons why I was leaning more to the sell side on this name, right? Value stocks and boomer stocks, quote unquote, typically follow some kind of seasonality. And usually we see boomer stocks or value names like this move significantly higher into the end of the year, which we saw very cleanly, and typically fade into the beginning of the year, right? And there's a few other reasons why I was looking for a rotation out of value. Obviously, this one day isn't an indication of a rotation out of value, but it's part of the bearish thesis, right? So again, right, just to kind of summarize that quickly, multiple reasons why I was feeling bearish on KO. Once I started seeing this specific trend break to the downside in this manner, that's when I began getting seriously interested in shorts. So I actually ended up going short, I think somewhere around here-ish. I don't exactly know. So I didn't get the greatest entry on my short position initially, right? I didn't get a very good entry, which is fine. You know, I could have made this entry a lot better, but you know, Not going to complain about that. However, the reason I took this entry is I was seeing increasing sell volume on the way down, and I wasn't as patient with the entry as I could have been. So I took it closer to the lows than I should have, because there's a really key support here at 62. So in hindsight, shouldn't have shorted right there, but no big deal. And I'll talk about how I made it through that. So I started with a small position, right? Especially when I'm taking a higher risk entry like this, the least I can do is take a small position to start off with. So taking that small position helped mitigate some of the unrealized losses I saw on Friday. And I ended up taking an average right around close when I saw this breakdown, right? And there wasn't any specific reason for that average besides the point that we had rejected this 36.7 level that I had noticed, right? Today, we finally got the breakdown I was looking for in KO. I saw 20% profits and took a trim of 50% of my position. I'm going to tell you guys a few things that I did to manage this trade and a few things that I didn't do, right? And talk about why it made sense intraday to do what I did and what I didn't do. So what I did do, right? I noticed price came back to the 63.7 level. I still, per my rules, had a little bit more room to add on a few more contracts. So I did that, right? And I got to a seriously full position right near these highs of day, right? That's not necessarily part of the trends lecture, just kind of some background. Next, I wasn't even looking at the SPY at this point in time, which for better or for worse, might have not have been the greatest idea. However, I noticed this change in structure right here. Can anybody see the difference here? I'll highlight it. Few things I noticed here. What do you guys see? What do you guys see? I highlighted it all, so that should be some pretty decent clues. Lower high, I agree. There is technically a higher low as well. I definitely agree. But I guess it's hard because I'm really looking for what is happening in this specific area. So I'll talk about what I see. I see a lower high after first tagging the strong resistance level. I see a lower high, right? So that's not anything just yet. That's an indication that buyers are getting weaker, but no confirmation yet. Then I see a break below this previous low, right? We saw some significant selling at this level previously in the day, and we broke below this low. And not only do we break below this low, but we retested it and still failed, right? And volume on KO was so low at this point in time. So we can't really look to volume because it's really the lunch hour. So KO isn't a stock that I day trade. However, when I noticed this breakdown, I actually ended up entering into a meeting at work. So for better or for worse, I kind of just I wasn't looking at stocks. I wasn't looking at the stock market, but I was feeling confident knowing that I had a full position of puts. I saw this breakdown intraday and I was feeling great. I was like, great, like, let's see what happens when I get out of this meeting, right? 3 hours later, I was out of the meeting at 12, and not only had KO held below this level, but it had continued in the downtrend significantly all the way to one of my first profit targets, which was great, right? Obviously, it's not always going to work out like that each and every time. What the point I'm trying to get across is, and this is something that I talked about, I believe, with 1K in advanced trade for, is when you take a trade, you should be able to walk away from it for the most part, right? Again, there are scalps, high frequency trading, maybe some day trades that you can't really just walk away from. But when I have the time that I did on these contracts, which were February 17th contracts, I shouldn't be panicking at all. And I shouldn't be making rash decisions off of a 5-minute candle, right? So I shouldn't be, going crazy if this breakout to the downside failed. But seeing that it made it below this significant level was a little bit reassuring to me when I went to the meeting, walked away, had no care in the world about what the stock was doing. I felt completely confident and comfortable because I knew exactly what the trends of the stock were at that specific moment. I knew that the daily trend had begun to turn bearish, right? And now after today, we have another lower high, right? So here we have our initial high right here. We have our first lower high. And now as of today, we have a lower high with a bearish candle closing near its low. I still have half of my position that I'm swinging short with plans to potentially bite again if we break below 62. So I'm going to continue to watch this setup short. KO's a really amazing stock to trade. It's, I think, relatively easy. I might bite my words saying that, but I think it's a great stock for beginners, especially because it's so cheap. It's so easy to trade considering it's cheap, and also doesn't move incredibly quick and really respects technical levels and trends well. So again, number one, I felt comfortable and confident knowing that the stock on the daily was forming a downtrend, right? Which is exactly what I want if I'm in puts, especially with a large amount of time. And number two, I began to notice that this intraday downtrend was forming, which gives me even more confidence and reason to be comfortable when I'm seeing this downtrend form, right? And again, no matter how you look at it, stock was in a seriously strong downtrend, which is apparently continued even into the after hours session. But we can draw a perfect line right here and notice how every time the price comes in, right? So let's say this is our first trend point, and this is the second point where we draw the trend. Notice the entries that this trend line provided, right? Confluent short resistance entries, right? So no matter how you look at this, honestly, if I was a day trader here, this would be one of the more ideal entries, this specific oval right here. And I'll talk about why. We broke below the previous low a day, right? Which is automatically going to be bearish, right? There's no really bullish indication when we break the previous low a day and hold below it. So we broke below this low of day on, I mean, you can see a little bit of uptick in volume, but again, KO, you're not going to see anything crazy. So we broke below this previous low of day, retested it, and retested this trend line at the exact same time, indicating that you have confluent resistance. You have multiple reasons to be short here. If we take a look at some other indicators that I typically follow, which is going to be the 20 exponential moving average from, I'll take a quick step back. What I'm doing right now is I'm showing how trends add so much confidence to your trading and confluence to your trading setups. What I'm trying to exemplify to everybody here is I'm showing how trends can fit in with many different trading strategies, how they can increase your confidence when identifying the direction of a stock and understanding where it has moved, where it's currently moving, and where it could move, and how you can use trends in conjunction with multiple other indicators. So this is one of the more common indicator setups that I typically use. This is the 20 EMA, this like light blue line from the 5-minute time frame. And this is the 20 EMA, the dash darker blue line from the hourly time frame, right? I like the hourly 20 EMA. I like the hourly 5-minute EMA. That's another kind of Al Brooks thing that I picked up on him. I used to use a 21. He likes using the 20. So I was like, I'll give the 20 a shot. And it's been working great for me so far. So again, right, here is another indication of how to determine what the trend is, right? These moving averages are something that I typically use to determine the direction of trend. So the hourly moving average, which is this blue line, is going to be the major trend, right? So if we're above this hourly moving average, the trend is going to be up for me. And I'm going to be looking to be long more than short when we're above this hourly moving average. And this 5-minute moving average is a little bit less significant to me. It shows me short-term trend and direction, right? And there's a few things that I look for in these moving averages to determine the trend. I talked about this a little bit in the indicators lecture, but I just want to show it again tonight just to give kind of that extra layer of understanding. So again, right, I look not only at where price is trading relative to the moving average, but I look at the direction of the moving averages. So notice here how the 5-minute 20 EMA began sloping to the downside, which is your first indication that a downtrend is beginning, right, based on the moving averages. Number two, notice how the hourly 20 exponential moving average. Somebody is in my house, I think. It's my roommate. I knew I heard somebody earlier. Sorry, that freaked me out. So again, notice how the hourly 20 EMA also began curling to the downside, which is another indication of a downtrend beginning. So just like that, we have 4 indications based on the trend of stock, or based on trends, that the trend is down, right? Just to recap, we have multiple lower highs forming. That's a downtrend. We have a downtrend line that can be drawn acting as resistance. That's a downtrend. We have EMAs trending to the downside with price trending below these EMAs. That's another 2 indications of a downtrend. So we're below the short-term moving average. We're below the longer-term moving average. And these levels are acting as resistance. All in all, this is how to analyze trend with multiple different layers, with moving averages, with price action, with just a straight trend line. So there's multiple ways to be looking at trends. There's no one way that's the best. I personally like looking at multiple different aspects of a trend, which is the moving averages on multiple timeframes, which is the lines that can be drawn on multiple timeframes, which is the lower highs and higher lows on a specific time frame. And just to hammer this example home, I want to talk about one more trade idea, actually that Zabe's kind of got me looking at, which is Netflix. We take a look at Netflix daily chart. You'll notice first this potential lower high that we're putting in. Right. And it's very much a potential lower high, but this is an area where we've seen sellers in the past. So it's safe to be assuming that there's going to be some resistance and sellers in this 320 area. Not a bunch of confirmation today as we didn't get an increase in selling volume. But what I am looking at is this trend right here. I'm going to make this clean. Clean. Okay, this didn't work. Let's clear this. So take a look at this. If I draw this uptrend very simply from the lows, notice how price has very nicely respected this level, right? I mean, it's a really, really clean trend. What I'm looking for here is I'm looking for a break below this trend and the low of the day to be going short, right? Because that indicates to me a confirmation that sellers have taken over the direction of this stock. And today is the first day where we've seen some truly weak price action in Netflix. This is one that's been pretty strong, and it offers some decent short risk to reward for me here, right? So a few things that I'm looking at. Again, break below this 313 area for a short to the downside, which also would coincide with the break of this uptrend. Really not much support on this one until we get down to this 308 level, which offers a significant potential reward for minimal risk if you take out maybe this 316 level as your stop loss, right? So that's almost 2 risk to reward, which we could adjust this profit target and stop loss a little bit to be a little bit cleaner. But yeah, so this is one trade idea that I'll be watching into tomorrow, strictly based on if the trend changes. If the trend switches to the downside, I'd like to be going short. And notice a lot of my trade ideas are if-then statements. If something happens, I will do this. If something does not happen, I will do this, right? That is all trading is, and planning for trading for me is looking at a chart, understanding what it's doing, understanding the current trend, understanding where buyers and sellers are parked, and planning out for different scenarios. Because at the end of the day, nobody is 100% successful in predicting the market. Nobody ever will be, right? It's strictly not possible. However, what I can do is I can plan for multiple scenarios, and I can say, if this happens, I will do this. And if this doesn't happen, I'll stay away, right? And I was wrong. A lot of the time, right, we're going to be wrong. But if we have a plan in place, usually it won't matter, because if we're wrong before something even happens, it doesn't matter, right? We are wrong. Our trade idea didn't play out, and that's fine, right? Probably about, I would say, a little less than half of my trade ideas don't play out. The entry never comes, and that's fine. No big deal. So that is just multiple different layers of examples that I'm looking at. Trade ideas into tomorrow. I can think of one more trend line that I'm watching, which is Amazon. So we take a look at Amazon daily and hourly chart. Well, this is really messy for you guys probably. Let me clean this up really quick and then I'll answer the question. So Amazon, there's a few trends that I have been taking note of. The first one is this daily downtrend here. So we draw that down, something like that. And then the next is this 4-hour downtrend right here. You draw it just like that. So what I'm looking for is a break above this trend to go long. And notice how perfectly price respected this shorter term downtrend level today. I mean, it's really no joke that trends and price action and support and resistance levels are so important to not just retail traders, but clearly people with a significant amount of money and funds with a significant amount of money are taking notice of these key levels, whether they're consciously trading them, whether algorithms are trading them based on other indications or whatever it might be. Regardless, on our end, we can identify these trends and realize, hey, there are some sellers here, right? So again, right, just another example of trends there. We can think back to our moving averages example and be looking for the moving averages to curl to the upside and price break above them for an uptrend to form, right? Multiple different layers as we discussed tonight. But I'm going to take a quick break because you guys are probably getting overwhelmed, maybe not. And I'm going to answer some of these questions. So let's see what you guys have here. I said 5 and 20 MA. No, it's the 20 exponential moving average that I am using right now. So I use the 20 exponential moving average on the 5-minute and I overlay the hourly 20 EMA on the 5-minute. Yeah, I use EMA, not MA, just because as like more of a momentum focused trader, I like the exponential moving average because they're more reactive to current price action, which I personally prefer. How am I setting up EMAs by time frame? It's a custom study phase. If you wanted, I could send it to you or anybody else. For Webull, has a little circle. Yeah, it's probably built in on some. Yeah, time frame that I was on at that time, 1K was right. I was looking at the hourly. If we break the trend on Netflix, would I wait for the retest on the 1 hour? That would be ideal, certainly. Awesome, Cade. Happy to hear that. Bullish divergence overdue on Amazon. Douglas, iPhone, do I recommend to use 10% of the port or less? So that's something that I'll discuss in more detail in the portfolio balancing lecture. However, I will say that for new traders, 10% of the port sometimes is, $100, $200. Not saying you have a small portfolio or don't have a lot of money. I'm just saying typically it's nice for a newer trader to have a smaller amount of money because they have less risk, right? That's usually a good thing to have less money when you're starting. I will say that sometimes it's hard to be in 10% of your port for a $500 port, right? Finding a $50 play is hard. So I can't issue a blanket sizing that's good for everybody, right? I can't say, 10% is good for everybody, right? Because it's not. If you have $1 million, you should never be putting 10% of your port into a play. That's completely unnecessary. So it's a balancing act between your portfolio size, your risk tolerance, and all that good stuff. So I can't issue any specific guidance on what is best for you. However, I can issue some tips and tricks to figure out what might work better for your risk tolerance and your portfolio on your own. But yeah, if you want to hear more about that, we can maybe DM or just wait for the lecture on that. But I will say that typically, for the most part, you don't want to be in much more than 10% of your portfolio in any specific trade. That's just a good general rule, is 10% is usually a large amount of your money. And think about that. If you lose 10% of your port in one play, which ideally you never just letting a play go worthless, but if you lose 10% of your portfolio in one play, that's a massive hit. And you do that 10 times, your port's gone, right? So just keep that in mind. And obviously not exactly 10 times because the 10% scales, but I think you guys get the point there. So that being said, right, I want to recap some of the things that we've covered tonight. We talked about the basics of what an uptrend and a downtrend is. We talked about why it matters and how to analyze these trends in real time, why they matter, how to use them for day trading when looking at them in pre-market, how to use them in conjunction with other indications, including support and resistance and moving averages. With that being said, does anybody have any questions on the content that we discussed tonight? Was there anything that you feel that I went too quickly on, or anything that you feel like we could revisit to make more clear? I do feel like I went probably a little bit hard on just throwing us all right into example, but you guys are all a smart crowd tonight. So I think it seems like you guys handled it decently, but I just want to get a little bit of a pulse check and just see how everybody's doing tonight. If you guys are feeling like everything is mostly making sense, you feel like you learned something so far. If you feel like you missed something, I'd love to revisit it. So yeah, well, you let me know that in the chat. I will take a look at some questions. So you find the trend on hour and trade on the lower time frames. Yeah, typically when I find trends is on the daily and the hourly chart is where I typically find trends for kind of the longer term stuff. And then like pre-market trends, like I showed earlier, typically I'll be looking at the 5 minute. So I'm looking for trends on all time frames. That makes sense. So how exactly does volume affect the trend? So that's a great question. Essentially, the way volume and price action plays is volume to me is the price, right? Because volume represents the buyers and sellers at any given time, at any given moment. So without volume, there is no price. And without price, there are trends. So that's kind of how related in my head. I will say that where volume matters the most within a trend is when you're breaking above a key level or when you're bouncing or rejecting a specific trend. So like, for example, if we take a look at Netflix, right, and how this trend has been behaving so far, let's see, right? Notice how we get, I guess it's not as clearly depicted here because it's hard because most of the volume that we get, I mean, I guess this is still reasonable, but if you look at the volume average here, which is this blue line, notice how every time we come down to this trend, volume is significantly above the average. And it's also important to note that every time we come down to this trend also happens to be at market open, which could be a coincidence and also could be intentional because typically at market open, there's going to be more volume in general, right? So in this case, correlation is not causation. However, this is the type of pattern that you'll want to be looking for a strong trend is you'll want to see this volume come in every time price reduces this trend. With that being said, if you begin to see volume decreasing when we bounce a specific trend, that indicates that whatever side is in control is becoming weaker, right? Because it's showing that less people are willing to buy that trend as price is increasing and decreasing for whatever reason, right? So for a strong trend, you want to see that selling or buying increase or stay constant as the trend continues. But in this case, we're not seeing, well, I shouldn't say that, but yeah. So that's essentially kind of how volume plays into trends. Does that answer your question sufficiently, Cade? If you have any more kind of follow-up questions, feel free to let me know. What about outside market trends, like certain news? Yeah, obviously that's something that we didn't cover tonight, but that's definitely something to keep in mind. Like, for example, the trend of CPI will play into the trends in the market. The trend of the federal rates plays into the market. Like, for example, their pace of rate increases. You can think of it. Let's see if I can find that. Let's take a look. Is Fed funds on here? Let's see if I can find that and pull that up. Let's see. Don't know if I'll be able to find it here. Oh, this is probably what I need actually. That's why I was looking at the wrong thing. Interest rates. I actually haven't really looked at this. Treasury bills. We can just look at the 10-year. Actually, we'll look at the 1 year because that's probably a little bit more representative. Let's look at this. And let's look. Oh, wow. This is the, I don't think this is, oh, this is the rate. This isn't, okay, this isn't what we want to, I don't want to go too far down this path, but essentially, like absolutely trends outside of the market, or I should say outside of the stock charts, absolutely affect specific stocks, including like trends in earnings increases, like increases in earnings per share or increases in, you know, earnings before interest, taxes, and depreciation and all that stuff. So there is a lot of different trends that matter outside the market. I wanted to try and depict it there, but I don't want to spend too much time digging through that to find the right indicator on TOS. On longer time frames, how many candles can you create a trend? Maybe the 1 day. You got to have at least 2 candles to create a trend. And typically when I'm drawing a trend, the candles that create it aren't right next to each other. Like, for example, if I was drawing a long-term trend here on Netflix, I would draw it exactly like this. That's my long-term support trend, right? Notice how the past 2 times we visited this trend, there was a pretty significant increase in volume, right? Here, saw some buying. So it's important to note that if Netflix revisits this trend, I'd definitely be interested in going long. The setup that I'm looking for is much more short-term, not a long-term setup. And if Netflix came back to this trend, I would definitely be interested in going short. Oh, this short-term line, this is something that I drew from the hourly, not the daily. So that's why it kind of looks like there's more going on there. This is just the daily trend here, or hourly trend. Yeah, this would be an uptrend right here. But the trade that I'm looking for is a short if we break below this uptrend. Does that kind of make sense? So I'm not looking to short while it's still above the uptrend because that doesn't make sense, right? The trend is clearly up. So if I'm shorting while the trend is up and not at a strong resistance, it doesn't make sense. On the daily, if 4 candles are going upwards, would it be in an uptrend? It's hard to say because it depends on where the previous highs and lows have been. Like, for example, let's look at a stock that's probably pretty beaten up, like PLTR maybe. Like if you take a look here, right, there's been plenty of days where the stock has had 4 or 5 green candles in a row, like here. But regardless of this, it is still very clearly in a pattern of lower highs and lower lows. So you have to zoom out sometimes to really get the true picture of the trend. Can I check SMCI earnings increase per share? I'm assuming that's Norvin. Norvin, I can DM you about that name if you want. How about XLE? Yeah, let's take a look. XLE is going to be a similar concept. That is a name that I've also been watching for a potential lower high. Oh, wow. Wow, this actually looks kind of decent for a short here. XLE, this 88 level is really key. It's one that I've been watching. You'll notice it actually broke above this uptrend. So if we get back below it, that would be a really nice fake out. And oh, wow. Yeah, XLE is looking shortable to me if we give up this uptrend right here. I'll keep my eye on that. I like that idea. I'll just set an alert for now. You did not know I like ETFs. Yeah, I don't trade XLE very frequently. On XLE, those 4 candles are going up, so you're looking for a short on the break of those. Like these ones here. You want to break below this? Oh, daily. Gotcha. Nice. Is there any other questions? I'll look at QCOM in a second, Norvin. That's the last thing I'll look at, though. I just want to make sure there's no other questions. How do you guys feel after this lecture? If there's no questions, how do you guys feel? Do you guys feel like you gained something out of this class? Do you feel like you're going to be able to apply this knowledge in the market tomorrow? What I will show you guys is every day I recap the price action on SPY, and hopefully this can act as a reference for you to continue to develop your knowledge. And I highly encourage you to do a markup like this as well, because it helps you just learn and study. So here you can see in my recaps, I draw the trends out. I analyze where the moving averages are. I analyze where we're moving relative to the key level. So I highly recommend that you guys all perform a similar set of analysis, because I think it's very relevant. And yeah, let's learned a lot. Thank you. Glad to hear that, Ronan. Cool. Very good. What do I think of Pfizer? I'll take a look at QCOM Pfizer, and then I'm going to wrap it up here. QCOM, I honestly don't like it as much as the other semis. NVIDIA, AMD were really, really strong today, but when you look at QCOM, it's just kind of nothing really that special. So I'd be more interested in longing a name like NVIDIA that just made it above this pretty key level, and this moving average is starting to turn to the upside in the short term, and it gapped far above this range, which is a pretty powerful move, although it didn't close with a very strong daily candle of the upside. Yeah, I know, 1K. Usually it's worse. What OOT ever have a technical analysis course more focused on charting, like super focused on charts? I'd like to think that this course is pretty chart focused. But if you feel that it isn't, maybe wait until we get into the more advanced technical analysis stuff, because that will be like pretty much purely chart focused, if that makes sense, Maria. But if you have any more suggestions, Maria, please just feel free to send me a message, and I can do my best to get something in play for you that caters more to that, because I do want to get some more advanced stuff done. Pfizer looks like a short. This looks horrible. Yeah, this looks like a really nice short. Obviously not right now at the lows, but this is a great example of a trend reversal, actually, right? Again, drawing it back to the lecture. Uptrend here previously was in place, broke below that uptrend, broke below this previous support, and now we're really getting moving to the downside. So I'd be looking for a retest of this 48, 80, 49 level. So I'll actually set an alert there. And what I'm doing when I'm setting alerts is if the price makes it to this area, it alerts me on my phone and on my computer if I'm on the computer, and lets me know that the stock is trading at the area of interest that I marked out earlier. When do I turn off extended hours? I don't normally. What moving averages do I use when looking at trends? When I'm day trading, I just look at the 20 EMA, but when I'm planning out trades, I look also at the 20, 50, and 200 moving average, which in this case, Pfizer actually just broke the 200 moving average on increased selling volume, which is another reason to be feeling more bearish too. So yeah, that's definitely a bearish setup to whoever mentioned Pfizer. What candlestick time frame do I recommend day trading with? I would not recommend the 1 minute personally. It's so quick, especially, I know, Cade, you're a little bit newer. I would not recommend the 1 minute. Obviously, you know, it's whatever works best for you. If you find that the 1 minute is best for you, that's fine. But I personally, the lowest time frame I use is always the 5 minute. I don't use anything lower than that. And again, that might not be the right time frame for you. Just keeping that in mind. But yeah, I never go lower than the 5 minute. I think it's too much for me. I don't need to see what's going on in the 1 minute. All right, Norvin, I'll look at TSMC just because TSM is what it is. Yeah, not much I got to say about this, to be honest. This is an interesting one. If anything, I'd probably be looking for it to fill this gap to the downside. I'd be more bullish on NVIDIA, more bearish on this, just because of this gigantic gap. Looks like they got news or something though, and they have earnings, so everything's gonna be expensive. But yeah, if I'm playing TSMC, I'd probably just be looking for this gap, but I'll set an alert to the upside just in case. All right, yeah, you're pulling on options way earlier than you should because the 1 minute makes you nervous. Yeah, zoom out, Kate, definitely. Remember, like we talked about tonight, the trends on the higher time frames are more significant anyway. So the trend on the 1 minute and the price action on the 1 minute is way less significant than what's going on the hourly, on the daily, even on the 5 minute, right? So keep that, and remember that there's always going to be weird stuff happening on the 1 minute and even the 5 and the 15. But the more you zoom out, the more you get a more holistic, is that the right word for that? Review and understanding of the actual trend. Yeah, I know. I set 2 alerts on TSM. One's above and one's below. Just because since they have earnings, I'm actually interested to see where this kind of goes, but I don't think I'll trade this. All right. I think from here, guys, I think I'm going to wrap it up. I hope everybody enjoyed. I'm going to look for a little bit of your feedback in the trade floor to see how you guys felt, how you guys are feeling as we're getting closer and closer to the end of this course series. We got like, I mean, I don't know. I could probably extend it on longer too. I got like probably 4 or 5 more lectures to do of this series before I start getting into some assorted topics, and then I'll probably repeat it again maybe in summer or something. So yeah, everybody, I'm gonna wrap it up here. Again, as always, it's a pleasure that you guys spend this time with us every weeknight in the lectures. It's definitely a blessing, and I can't thank you guys enough for attending here live. As always, I do my best to value your time and pack as much information as possible into these lectures. So I truly hope that you guys enjoyed tonight. If you have any comments, questions, feedback following this lecture, please feel free to send me a DM, tag me in Trade Floor, whatever is the best avenue of communication for you. I would love to hear your feedback, love to hear your questions in the future. So with that being said, everybody, going to wrap it up here tonight. Hope you guys have a great rest of your evening, and I will see you all in the Trade Floor, talking charts, talking stocks tomorrow. All right, everybody, always a pleasure. Have a great rest of your evening, and I will see you all soon. Adios.